All right, boys. Welcome to day one of the boot camp, baby. Let's go. Today we're gonna go over very, very simple stuff. I'm not gonna get anything crazy. We're just gonna go over candlesticks today. So I hope you guys can see my screen. I'm not really sure. Okay, yeah, you can. Um, so let's get right into it. Let's just go to the side here. So candlesticks, right? I know you guys see all these stupid ass patterns. Like, let's go look it up real quick. Okay. Candlestick patterns. Okay, and you see all these fucking bullshit. That's not a good example. Um, it's like head and shoulder. Okay. Morning star, bullish breakout, and like the flag bullshit. Got your evening star, bearish breakout. There's something called like three drives, whatever, three white soldiers, bullish rejection, morning star. So if you go into the markets, all right. It's probably even more over here. Inverse hammer, bullish engulfing, hammer, blah, 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 hanging man. There's a bunch of fucking shit, dude. I'm saying this shit could go on forever. But if you go into the markets and you're literally just looking for these patterns, you're gonna get fucking destroyed because you're like, oh my God, it's a fucking W, whatever. And you're gonna go look for it and it's gonna be come back down and it's just gonna fucking run right through your stop loss. Um, so don't recommend that. The only ones that I recommend is knowing is these dojis. I don't know if you guys see this shit's pretty blurry for me. Uh, whatever. Doji, whatever, long doji. You got your dragonfly doji, hammers. Um, yeah, it's just a bunch of pattern shit. Like you have engulfing, whatever. Yeah, I can tell you some shit sometimes, but at least you know your dojis and stuff like that. But so what are these candles, right? So let's say you have I can fucking draw this shit, okay? Got this little candlestick here. That looks like a doji, I'm not gonna lie to you. Let's fix this. Okay. Got your little green candlestick, which would be a bullish candlestick, okay? And then you have your red candlestick, okay? And so you notice how you have the body of the candle, okay? And you have the wick. So basically for bullish candles, right? Price is gonna open. This is gonna be your open price, and this is gonna be your close price because you open lower and you close higher, which is why it's a bullish candle. The wicks tell the story of how price kind of went, right? So what did we do? We open, we could have come down a little bit. Bears kind of stepped in, and then the bulls fucking push it all the way up here, right? And then we closed up here. And then for bearish candles, right? We open here, we open higher, we go up a little bit, fake out, whatever, and then the bears kick in, boom, push it all the way down, and then we close here. Okay. So let's just delete all this shit. So obviously I said there's different types of candlesticks, right? So you have your doji candlesticks that kind of look like this, where you have a small body and big wicks. And I'll kind of show you guys in a minute. When you see these on the charts, right, you really want to pay attention to see, how price kind of reacts because say, we're in a downtrend, right? And you get a doji at some point. That means, not always, obviously, but that whatever way it's going, they're exhausted, right? And it's like, okay, you might start to look for, reversals out of this and, kind of see where price goes from there. But if we look at some examples on the chart, okay, just look at pure price action, pure candlesticks. Don't worry about any other thing right now, okay? So what do we got here? This is the other day. We have this massive move down, okay? And we get this first 5-minute candle that's kind of showing that we're rejecting bearish order flow. And then when you see a rally up, okay? You got these big wicks taking out, what you guys will learn in the next videos or whatever, taking out liquidity, right? Big wicks. And what do? We go lower. Okay. See if I find that. Oh, here. See, like this is what I'm talking about, right? So if you purely base just off one candlestick, you're gonna get fried. Okay. So what do? This is at 3 in the morning, so you shouldn't even be trading shit anyway. But what do? Boom, massive push up. Then what happens? You get this massive doji candle. Or that's a reverse hammer, bro. All the way to the downside, but it holds bullish, barely. But if you go off this, you're like, oh shit, like this is going down. What does it do? So it doesn't matter, right? It's all about price action. Candlesticks tell a little bit, but you can't just base off, one candlestick, right? Because look, you have a down move, you have this breaker candle, we call it, and you get another fucking down move. Let's look on the weekly. See if I can show this a bit better. Yeah, it looks pretty bad. Um, Maybe daily will be good. Yeah, I mean, you can kind of see it here, right? We push price higher. We take out, these draws, right? So you guys will learn soon. And we're just putting wicks up, wicks up, wicks up, wicks up, wicks up, right? And then what happens? Boom, sell off. Okay. This only goes back to, damn. See, like what the, oh, because I know the problem. Yeah, so basically the reason I switched that. So there's different like contracts. Show you guys real quick, even though it's not gonna make sense for you. Contracts. So I was just an H, right? So H is March till June, basically. June to September is M. September to around November, December is U, and then Z. Um, which is why it didn't show like the past candlesticks, whatever. But it's a side fact. So you can probably look at the weekly now on this. It'll look way better. Yeah, okay. Let's see. Okay. Boom, right here. Push price higher. Boom. Doji candle. What happens is on the weekly time frame. Push price lower. We get exhausted. Okay. Um, Here's another example. We're going lower, lower, a little higher, right? And what happens here? We get two doji candles at upside. And what do? We rally higher. Okay. Kind of big, like down move and up move or something. Guess you could say this. Like this is a crazy wick, right? We put the sellers push price all the way down here, but the buyers held it. And what do? We rallied back to the upside. It's very simple. Like this stuff, this is like very, very, very basic stuff. Um, but it's important. So let's go on the day. Look on the daily chart. I mean, once again, time frames are fractal, right? So every time frame you can find entries, whatever. You can find these candles, you can find your little patterns, right? If you want me to find you a fucking whatever pattern, let's see if I can find one real quick. Head and shoulders. I mean, this is kind of you could call this head and shoulders right here, right? So you got your boom, shoulder, head, shoulder, and we fall off. Okay. Like, but you can't base your shit. I see a lot of forex dudes doing that shit, but it's like, you know, I wouldn't. But if you just purely look at the candlesticks, right? When we have like massive moves to the downside, what do we do like 95% of the time? We rally higher, right? Boom, massive candlestick down. What are we doing? We're sweeping out the sellers, bro. We're pushing price higher. Price over time will always go up, right? So you really got to worry about that. Yes, there are flash crashes, whatever, but it's natural to the economy. It's how it works. You know what I'm saying? But boom, massive move down, move up. And same, there's probably same like massive move up, massive move down, whatever. Let's see. And sometimes you get, you push up, you fake out, you fill orders, and you fucking die again. But anyways, all I want you guys to do, okay, very simple, is just, go look at the chart. I know you guys want chart hours, whatever, but you can't just go straight into the market. You gotta go like day by day. So that's what we're starting today. All I want you to do is go look at the chart and see how different candles have different reactions, okay? Like, boom, doji candle, fucking dump to the downside, rally back up. Doji candle, dump, rally. Like, very simple. And in future videos, we'll get into, what these wicks kind of mean. And like when this wick takes out this wick or whatever, or when respects, this, then this might happen, because nothing's ever 100%, right? We are reactionary traders, okay? We react. We do not predict. And that's the biggest thing. We do not predict the market. We react to what happens, okay? It's just because you see this big ass down move, right? Doesn't mean that we're just gonna fucking make the one candle and go right back to the upside, right? Because other shit, there's so many other things that go into it. So what I want you guys to do for your homework, pretty simple. You go on the charts. I want you going all the time frames. I want you to find 5 examples, whatever, of just like doji candles, whatever, inverse hammers, whatever, of how price has that certain candle and reacts to it. Okay. It's very, very simple. This is a short video, but I will see you guys in the next one. I can pause this fucking recording.